As somebody who invests in companies for the future, I only consider stocks in the heart of long-term growth trends. Any investor with this strategy has surely heard of the data analytics provider Palantir, and I must say well done to those who found the stock before me and dove in at the IPO price. Thanks to this hot streak combined with an IPO frenzy, the stock has shot higher, higher and higher. So has the boat sailed, or is this stock still worthy of a place in your portfolio? Hey everybody, my name's Connor and welcome to my channel Trade in Places. My aim is to help you take advantage of the stock market so your money can work for you so that you don't have to. In this video, we'll quickly assess whether or not technology stock Palantir could be a good investment. So let's start with the good. Palantir is a unique data analytics platform in that they claim to be selective in who they wish to work with, and this has helped them win the trust of the US government. The company also works with non-government agencies. However, their clear allegiance to Big Brother could well limit their success in the private sector. In fact, Palantir was in the past accused by JP Morgan, who were a former client of theirs, for spying on all of their customers, and that has given Palantir a bit of a bad rep amongst the most cautious within the private sector. Although this could limit Palantir's total addressable market in the long term, the company's choice to specialise in providing solutions to governments is providing them with a lot of near-term success. In fact, Palantir recently won some lucrative projects with the British government, showing that the company is not limited to the US and may not even need the private sector in the long term. Right now, analysts are expecting the business to post annual earnings growth of 40% and become profitable in 2021 with a price to earnings ratio of around 240. It's refreshing to see a growth company that actually makes money. However, I do believe that a forward PE of around 240 is very high for a company posting 40% growth. The stock therefore seems to have gotten a bit ahead of itself, with investors clearly hoping for better than expected upcoming earnings. You've already heard the good, but here are my concerns. First of all is the possibility for a deep correction. The stock price has already tripled in the first 3 months of trading, as investors were so eager to grab a piece of this new growth stock that they've been prepared to pay almost any price, and this rush has created a pop in the stock price. This is common for IPOs and is often followed by a large correction as high as 30 to 40%. Secondly are the most recent analyst downgrades. Recently, 5-star analysts at Credit Suisse and Morgan Stanley downgraded Palantir, slapping price target of $17 on the stock, which despite representing a 70% increase from the IPO price, suggests another pullback of around 25%. Another concern for me is just how expensive the stock is based on its price to sales. Palantir's revenue growth of 40% is just not enough to justify a price to sales ratio of 37. For example, other similar growth stocks expecting to become profitable next year, including JFrog, Beyond Meat and Mercado Libre, are all cheaper on a price to sales ratio, yet growing a lot faster. You can pause the video here and check out this table to compare the key fundamentals of some top growth stocks. I'm also worried by the company's lack of diversity. There's no hiding the fact that Palantir is becoming increasingly reliant on government contracts. However, what worries me most is the fact that the company has 125 customers and relies on less than 20 of those for 60% of its revenue. Compare this with other fast-growing software or cloud companies like Snowflake, Fastly and Splunk, which each have over 3,400 and 500 customers, and Palantir looks rather undiversified. Having worked for a consultancy that relied heavily on Santander and Barclays for 30% of our revenues, I have first-hand experience of just how quickly a company can tank when they rely on a handful of clients. There's 2 more things that I want to mention before you make your decision on whether or not to invest in Palantir, and the first is their upcoming lockup expiration date. Lockup expiry dates are extremely important, and you should make sure that you always find this out when buying shares in a company shortly after it IPOs. The lockup expiration date is the first day in which insiders of a company can sell their shares. Palantir's management own a whopping 80% of the total outstanding shares in the company, and they'll be able to offload these shares in February. If management choose to cash out, then this could spark a huge sell-off in the share price. The last thing to consider then is Palantir's limited total addressable market, often referred to as a TAM. In their S1, Palantir claimed its total addressable market was 119 billion, and with the stock valued at 45 billion, investors are willing to pay 40% of Palantir's TAM for shares in the company, and that's pretty ridiculous. To summarize then, Palantir is an exciting company that has carved out a niche for itself in a fast-growing industry. However, the company has delivered lots of good news this year, and that has whipped up a buying frenzy amongst growth investors. Right now, I believe that the company is overbought, and its $45 billion valuation represents where Palantir should be trading in a few years, not today. Remember, this is not financial advice, but hopefully you do find the video informative, and I hope it can allow you to make an informed decision on the stock of Palantir. Before you go, please click the like button. It takes a second, so unless you have to rush off and save a life, then please show some love, like and subscribe, and give me back 5 seconds for the hours it took me researching, writing, recording, editing, and uploading this video. Stay tuned for my upcoming videos. I've got loads of cool ones in the pipeline. Obviously, subscribe to get a notification when they come out. That way you'll be able to act fast and hopefully make or save yourself some money on the stock market. In the meantime, check out my website 𝗨.𝗦 𝗚𝗢𝗡𝗠𝗘𝗡𝗧, and remember that your money should be working for you and not the other way around.